And good afternoon, everybody. I'm Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott Wave update for the S&P 500, the ES, for Tuesday, May 4th, 2021. Beautiful day today, folks. Beautiful trading day today. We had left it discussing yesterday that the market still, the ES still needed to come down and complete this fourth wave. And initially, I had expectations that it should at least break down to that 618 level, which was 4,165, we'll call it. And then with a hope that it might break below 4,160. Well, it sure did today. That hope was answered. In fact, it not only just broke it slid lower. And it went through that, and then it went through 100%, and then it went down to reach almost 1.236%, and that would be of the A wave. So I have now put a 4. I put that submenu at 4 here, and again, we're looking for minor wave 5 to carry us back up to new highs, and that then should be completing our larger advance. And again, we're going to be looking for above 4,211, definitely above that, and getting up towards 4,300 to complete this long intermediate third wave. And eventually set us up for a larger fourth wave correction. So what can we expect for tomorrow? First, let me say, the recovery off of that low today, which was, let me just be detailed about that, 4,120.50. That was a pretty significant level because, like I said, it was almost down to 1.236, and it blasted back off of that level, blasted, and managed to rally $40 before it slipped just a little bit lower by the close. Now that we're starting at the beginning of Globex here, we're still kind of a little bit iffy. Where do we go? A little bit up, a little bit down. But more remarkable towards what happened in that closing hour is that the fact that the NASDAQ and the stocks that are common for both the S&P and the NASDAQ just really continued to hold the NASDAQ lower as the Dow rallied back all the way and into the green. They ended positive on the day. Kind of was remarkable to watch because of the intensity of the selling that we saw in the morning. Now, that recovery off of there gives me some good strength to say that we likely finished wave 4, this correction that we were counting, and now we're into that 5th wave advance. So with the advance likely has restarted, and will get additional confirmation if it starts just moving straight up through these resistance levels. Now, today's recovery was very strong. The S&P was down pretty large today, actually, and over 50, maybe closer to 60 points, somewhere up in there. And that's a pretty big move. That's a sizable move for this index. And so I am now basically going to be expecting similar moves as we start to blast higher, because we have everybody coming back in. Let's not forget that the first week of a new month, particularly around the 5th, the 6th, and that's tomorrow and Thursday, we're getting new 401k money, IRA money, coming in through hedge funds, coming in through portfolio managers, and that's new money. So we may see the market start with a little bit of a decline. Again, the S&P will get caught if the NASDAQ starts to sell off with intensity again. The poor S&P is not going to be able to escape that and get around it. Now, it may dampen the rally, but I think that the larger players like Apple, Amazon, and Google that sit in both indexes will pull the S&P lower. I would suspect that we shouldn't get too much of a pullback here, to be real honest with you. But if this, again, if that's 4, and let's say that this is wave 1 of this next 5th wave up, then we might, you'll run Fibonacci's from that point to that high, and that'll give you levels of where we think the market should come. So again, you're going to run Fibonacci retracements, not extension, just retracements of that level, and that'll give you levels coming off of where it should come. I think we're going to find support at 41.50, and it should not really go below, I'm going to say below 41.40. I think that's about as low as it should get in a wave 2. Although wave 2s, not uncommon, they can retrace 100%. They can't go beyond that, but they can retrace a whole lot more. So the fact that this market could come all the way back, still be a wave 2, and then blast once again. So I'm kind of looking for the possibility that we'll get a lower opening and for the market to move lower initially. And it may hover around those lower levels before it starts to rally. But I'm really thinking that the new money coming in is going to be significant and will likely start to push the market higher again. So I'm going to leave it there. I just suggest that please, again, just trade what is in front of you. Use your moving averages. Moving averages are your best friend when you're a day trader. They help you pick entry and exit levels. They keep you on track. When your charts are in alignment, and by that I mean when your moving averages are in alignment, they're all pointing in the same direction, that's a strong indicator that we're going to go in that direction for a while, whether it's up or whether it's down. In today's case, it was down. Now, those moving averages turned very quickly, and you can see that the 50 and the 200 kind of just joined and went, whoa, let's wait, what's going on? And the buying pushed it. Now, if these turn and this turns, and you get the 50 above the 200, and the other ones come up and they're above the 50 and they're in alignment. And what I mean by that is that in this case, for going up, the 50 is above the 200, the 20 is above the 50, and the 4 and the 8 are above the 20. That's in alignment. That means get out of the way. Do not interfere with what the direction is telling you it's going to go. I'm going to leave it there. Our next update will be tomorrow, May 5th.